Hey, ladies, how are y'all doing today? Happy Friday!
Hi there.
The
Hi,
sun finally
Amy.
came out. The sun finally came out, and it's so good to be back recording these. I haven't recorded any in probably 3 or 4 weeks. I got braces.
Oh, look
I
at
put that out there. I got braces, and then I got COVID. So
Oh, I
I
know.
know, right? I have been under the weather, and I'm just a little bit off of being out in the public and everything. So,
Well,
but I am ready to get back to
I'm
making
glad
Friday
to see you
videos.
recovered. Yes.
Yeah,
Look, we miss you, Amy. We look
thank
forward to
you.
our Friday live. So thank you
Yes,
for jumping back in, and I'm ready to go again because
and
we
I
look
missed
forward.
the thing with Guild yesterday too. Yeah,
Yes, we
last
miss
night.
you,
Yeah,
ladies.
yeah. I
It,
had planned on coming to that one, but
but the rain was unreal, so we understand that.
yeah.
It's definitely good to see you too, Illiana.
Hello, hello. It's good to see you, ladies.
Look, happy Friday, excited, and we have been most excited following you. So we're gonna jump right into it.
Yes.
Absolutely. Let's get started. I am excited to be here, definitely so.
Yeah,
Thank you.
Illiana Byrd is a loan officer with Yield Mortgage, and she has an awesome social media profile on Facebook, and you said it on Instagram too. She posts these wonderful little informative reels that she is making, and they caught my eye this week. And so I started actually going and looking for them to watch them, and I'm like, these are great, to be able to share these fun little tidbits of knowledge. So we just wanted to kind of talk about that because we don't want to always be so serious. We want to be relatable and have fun too. We want to make the home buying or selling process fun, because we know it can be a drag. There's a lot of paperwork and all that, but we can still have a good time, especially when we get to the finish line, right?
Absolutely. Yes, yes. And that was the main thing about creating content that is, just fun because
Yeah.
we got so much going on. And of course, whenever you put it down in a funny way, they go, oh, I got you. I understand why. And it's always a lot better finding a new way to communicate, especially with our new clients, the new, I guess the younger millennials, and then we're gonna see pretty soon the X gens
Ready to buy.
jumping in,
Mhm.
which
What are we? We are what, Gen X?
or
That's
Gen
what
X,
we are.
Okay.
Okay.
we're Gen X.
Look, are we telling our age on
Keep up
Facebook
with
Live
this.
today?
We are Gen Xers.
Oh, okay. Look, guys, like I'm so excited. I know we talk a lot about social media and our customers and where they're at, but I definitely think that I'm real big on the team, and it does take a team of people to provide excellent service in this industry. And it takes a good realtor, it takes a good lender, it takes a good closing attorney, and you want to be able to relate to all the people in your process. And guys, we all spend time on social media. I am one of those moms that fuss all day long to get my son off of TikTok. And as soon as I get him in the bed, I'm like, one more video. Just one. And
Tell on yourself.
Scrolling.
right. Okay, I'm like, one more video, one more video. But that's really where we're at. We get engaged in everyday mundane, and then social media gives us an opportunity to kind of, see different perspectives of the world, because whether it's funny or something that's gone viral that you're like, oh my God, that's just kind of how we spend some of our time. But in this industry, to be able to see the information and the personality, because one thing I can say is that everyone that I work with is so professional. Like Amy, you just posted on social media how you go behind the scenes, you go to bat. You
Yeah.
do. When you meet Amy, you might think she's quiet, reserved. Amy and Dallas, Dallas is part of Amy's team. They're the funniest people I've ever met. But when you work with them, they are also the most thorough, professional, accurate, and that's who you want. You want to be able to feel like I can relate to this person. I can kind of be transparent about my goals and financials, and they can also understand me and wherever I'm at in my journey. So I so look forward to working with you guys. You know, Illiana, you and I go back years of transactions, but now I see these reels and it's like, you are part of my daily. I have to go, like Amy says, search them and see what information. Not only are you putting information out there, but you're making me laugh. You're making me feel good. You're making me tell a buyer, don't wait. You know, because I'm hearing you in the back of my head. So
that's right.
We've talked a lot about rent rates. And we want buyers to come up with the plan. So,
well, I show that one that I was watching. I think it was her most recent one.
Okay.
Let me see if I can play it, and then we'll kind of go into it.
Yeah, we can dissect it.
Right. Okay.
Just pull it up. Oh man.
Okay, hold audio play.
Like I can't say this enough. Stop waiting. Like I can't say this enough. Stop waiting.
I had to play it twice that she can't say it enough.
I love it. When borrowers ask me, should they buy now or should I wait until the rates go down? And the answer is clear. Play it again one more time for me, Amy.
Like I can't say this enough. Stop waiting. Like I can't say this enough. Stop waiting.
I love it.
Yeah, and the answer is stop waiting. Find out where you are. Find out if you're ready. You know, get to know the process. Find out. Do something about it. Yes. And I cut off the other part because it was a little rude, but it says you could be hit by a truck next week. Mm-hmm. You literally, nothing's guaranteed. While you have the energy, and I do believe this, well, you have the energy, go do things. Don't just sit waiting, you know.
And we talked about
an example. Yeah, an example is like me getting braces. Like I've talked about it for years. And I thought about something that I've told people before is this time is going to pass by anyways. So I said, okay, well, I might as well just pull the trigger and do it because this 18 to 24 months is going to go by anyways. And if I don't do it now, then I'm going to be down the road and I may be regretting it, you know. I mean, yeah, right now I'm still trying to figure out how to eat, how to talk, how to smile, whatever, you know. But hey, at least I'm 2 weeks into it now. So, you know, that's 2 weeks I can check off of it. It was going to pass by anyway. So I kind of think the same thing about getting ready to buy a house. People they get put off by how long it might take them to fix their credit, or that they might have to spend some money to fix their credit. You know, they may have to pay a bill, or they may have to work extra hours, you know, to get more income so they can have a down payment saved up. But you know what? The time is going to pass by anyways. Mm-hmm. That money, you're probably going to spend it on something you don't necessarily need when you could be investing in your future and getting that home and to stop renting or living with parents or upsize, whatever. And you were going to talk to us about, I think, about the rent rates and what people are really doing when they're renting long term.
Yeah, and that's the biggest thing. When I talk to clients, I said, well, let's run some numbers, and anybody can do this, you know, like, hey, how much are you paying a month? Multiply that times 12, which is 12 of the year. Mm-hmm. And how long have you been renting? Even if you've been renting for just a year, you may be paying anywhere between $10,000 and $15,000 a year. Mm-hmm. Where is that money going? And if you're making $30,000 a year, $32,000 a year, it's half of your income that is going to rent. Mm-hmm. So we gotta come up with a plan. But like I said,
like, I don't know if this is backwards or not. So like if someone's paying $1,200 a month rent, in a year they've paid $28,800. That's like kind of like paying all interest. Nothing has gone towards the principal of anything except for if the landlord has a mortgage, right? You're paying the landlord.
Right. And people get afraid. They get into this mindset. Oh my God, that interest rate is so high. You're paying 100% interest on something that is not yours. Mm-hmm. So let's really dissect what you are believing in. You're living in the fear of making a decision when actually it's going to be more beneficial for you to purchase a home, go through the process, let the money be invested, and allow basically your property to raise in get equity.
Value.
And you also, most people don't know that when they purchase a house, you get to deduct the interest you pay from your taxes. Some people don't realize that till they go and start filing their taxes. Yeah, there are many benefits. And also it gives you stability, because while your other friends, family members, or peers continue making rent payments that are continuing to inflate as we go into this inflation period, your payments remain fairly
consistent,
sustained.
and you're not subject to the market rise of rents. And you brought up inflation, and we've been talking. What I have noticed is that because things do cost a little bit more, I've had a couple of conversations where people are looking at, there are a lot of ways to cut back, because when you're spending more, you have a tendency to look at where is it going and what you can trim back on. And now is the time. I know we talked about different things to implement. If you pull your statements and see how much waste can be trimmed, those little small habits, I guess what I'm trying to say is trying to create new budgeting habits to create a plan. Things don't necessarily happen right away, even if you're excited about not waiting and going forward. There are so many small steps you can do. We talked about side secondary incomes to get cash available. We love our coffee, but cutting out Starbucks or something that may be related to something that is asset that you can put toward coming up with a savings plan to get. It's so many things we can do to get there. And not just be stuck saying, okay, well, everything's high, the interest rates went up, gas is up. Well, where are we spending money where we can put toward our home, where we can put toward those plans and cut back? So I think there's a lot of opportunities to start. You have to start somewhere.
That's right. That's right. And that's the main goal. Us as a lenders, or a good lender will say, hey, let's find out where you are first. And if not, we'll give you a guidance. Of course, you're going to need the credit score, the payment history, employment history for the last 2 jobs, and the savings set aside. And if you don't have it, let's see how you can save. Maybe you can get a gift from a family member. If there's not a gift, maybe we can come up, like you said, come up with a side hustle. Bake goods, sell stuff online. People like to buy
DoorDash,
anything that you can do to add additional savings, but have that drive to say, hey, I'm going to make this happen. And we're part of the process here to, hey, with our houses, I think that, you save a little bit of money. All of us have to go through that process at some point.
Right.
Definitely. I also heard, hey, marry the house, date the interest rate.
Because things change. And there's options for you that could be better down the road.
Right now, the interest rates are higher than they have been in the last several years. But they are not going to be there forever. Right. You can later on refinance.
Right.
So that's not like, hey, it's going to be a forever thing. But go ahead and commit, because you can go ahead and buy now and allow that in real estate to get
add value.
Definitely.
I think some people may be beating themselves up because they weren't ready last year when the interest rates were so low. Or they may be thinking, well, I'm just going to ride this and see if they fall again. But I don't think anybody is forecasting any major drop in interest rates anytime soon.
That's right. And that's what I keep hearing. Oh my God, I'm just going to wait and see if they come back down to under 3% like they were. And I said, hold on a minute. That was just a totally unusual thing because of COVID. The government had to come in and lower everything down. but that's not a normal thing.
Mhm.
You know, even 4% is really where we were a couple of years ago, 2019,
Mhm.
to 4.5, and we were okay with that. Even at that point, those interest rates are good, you know.
And I think the market is still really strong, especially in our area. We have we have more inventory coming on the market, so we just need to position ourselves. I think you're right, Amy. A lot of people thought that I missed it. I missed the wave where things, but that wave was crazy because we had low interest rates, prices were higher. So now we have prices stabling out, whereas each time a home was sold in the neighborhood, the comps were rising. So now we're in a position, I think it's really correcting. Of course, we all have debunked the it's going to crash and you're going to have foreclosures on every corner. But what's happening is with the stabilization, we now buyers are more coming back into the market of being able to position themselves for concessions, repairs, and price. So this is really the time for buyers. Like prior with the interest rates and so many buyers, out there in the market with limited inventory, they weren't in a buyer's position to ask for concessions or closing costs. So now we have stabilized pricing, inventory, and buyers are positioned again to be able to go into the market in a healthy negotiating way. So I'm excited about that. I'm excited that each negotiations about each party walking away, happy. So sellers are still strong because even though it's growing, it's still the sellers, but buyers are now positioned better in this more corrected market, I believe.
That's correct, because back in those days, I mean, they were taking high prices, zero contingencies. They couldn't sometimes, even if they did a home inspection, they couldn't even ask for anything.
For repairs.
So a lot of people now are finding out, oh my God, I bought a house and I regret it because I waived all my contingencies and I didn't pay any closing costs and I'm stuck with this property. No, there's got to be that healthy balance,
right?
Enough people wanting to sell, enough people wanting to buy, in that regular, going back and forth. That's what makes a market healthy. So I think that, like you said, I totally agree with that, and I like it.
I do too. And I also want to give buyers a little. I've heard this too, and this probably went back to the market because I know we did a co-buy and selling situation, Amy, and the buyer really made me zone in. Don't rush going through a house. If you need to tell your agent, you need to select one of us. If they say, okay, I'm gonna make an appointment, make sure your agent knows, get enough time for that appointment, because so many buyers spend 15 minutes in a house that they were then going to spend 30 years in. You want to thoroughly open kitchen drawers. You want to walk the home. Some buyers aren't able to make an inspection. So you want to be able to look at the roof and see if you see leaking. You want to open, where your children, the bathroom where your children will be used, and make sure there's nothing in the cabinets or, those things that, through the process, you'll learn through home inspection, but you really want to take some visual time in a property that you're about to make an offer on. And I think now we can really stand with our buyers in a calm, collective, in market environment and say, hey, take this in. We're not saying, okay, if we don't make an offer in the next 15 minutes, it's going to be off the market. We're not there anymore, which is thankful, because then we can really educate our buyers on the process. That's what I like most about the market correcting. I don't want my buyers to have a sense of urgency, because if I don't act now on the offer, I won't be able to find a home.
Yeah.
Or having to settle.
Right.
Like y'all were talking about. Or, even another point is, let's say somebody says they want to wait 4 or 5 years. Interest rates might be down. Well, the home prices might go up more. They might be up 10% or something. So have you actually saved any money if you end up having to pay 10% more for that house 4 or 5 years from now?
Yeah, the cost of waiting is relatively higher when you look at it. Like you said, plus things going up. I remember maybe 5 years ago, you were asking closing costs, 5,000 will cover it. Oh yeah, 5,000 closing costs, I got it covered. Now we need 7 because appraisers are going up. that wood infestation reports or termites, they are going up. I mean, attorneys are charging us a little bit more to close,
Yes,
access and
you have.
insurance.
Mm-hmm.
So, that's one thing that, of course, you don't want to scare your client, but you need to say, hey, this is what things are. And I try to do that when I talk to customers. We're going to need credit, your payment history, your basically your employment, to find out how much you make and how much we can purchase based on your monthly payments from the credit report. And then what about your down payment? Because I got people that have the first two and then they'll have the third, and they go, where's my pre-approval? I said, where's the money? Because we do need to have, even though you go 100% financing, it's good to have at least 1 month of the future monthly payment in the bank after everything is paid and you got the keys from your house. Because here's the thing, when you move into that house, you're going to need to do something else. Something else is going to come up. Either you got to rent a truck, paint, buy boxes. It's just, you got to be prepared. You don't expect to come to closing and you have $0 in your bank account after you. That's one of the things that I like to suggest to clients. That way they go, oh my God, nobody ever has said that to me before. I said, well, it's good to be prepared.
And I think you prepare a lot of people through your reels. They're funny, but they're definitely informative. Like, hey, it doesn't take a lot to get the information absorbed. And I love it because we have to relate to our situations. We have to come up with a plan, and we got to know what we can do. Because I think one of your reels, you were like, you mean to tell me 580? You couldn't, but people don't know at 580, we can build a plan. We can get approval. And those are the things that we want to communicate with our future customers and our clients through our social contact, and knowing that despite the reel and the laughs, we really do have the plan, the path for you in this market. That's what's most important.
Yes, and because not all lenders are equal. They have different guidelines, different requirements. So we just want to make sure, hey, this is what we do. This is what we require. So let's put it out there. And of course, every program has different requirements. But we follow where you are, and we just present to you what you can do. And the numbers and the options give you those answers. It's not like I'm trying to push you to go this way or that way. You look at the numbers, you look at the monthly payment, the down payment, the interest rate, and the funds to close, and you decide which program is best for you.
Everybody's got to decide that for themselves. It's good to have options, even if versus 30-year versus 20-year or 15-year, for instance.
That's right. And of course, for some home buyers, they have many options. 100% financing is just one of them. There are other programs that offer less amount of down payment. And of course, within the first-time homebuyer programs or 100% financing, there are variances in terms of where can you buy, the property qualifications, your debt to income, the credit scores. That's why you need to really get with somebody that knows the guidelines and the stuff and has the experience, so they can say, hey, this is where you are, this is what you want to be. But if you really want to get there closer, why don't you think about this? But if you want to continue with the other program you want, let's just put a plan in action, And then they go, oh my God, I didn't even understand that every program has different requirements. So, and I said, well, we're here just to make sure that we inform you the different guidelines on each program,
Illiana, that's your next reel. So you need to do each type of loan, USDA, FHA, conventional, and we need to put those out there so we can
take it down and see.
Look, I can see you with an Army hat on now talking about the VA loan.
Loan programs.
Look, and the types of loans. Look, I need to see you dressed up like an army soldier for a
Yeah.
video on reel.
No, I want to do the one that says, I've been through every emotion.
Oh yeah.
These are it.
With the interest rates. When they were
Yes.
back in 2000, 2020, 2021. And then this year, it was just like,
Yeah.
you know. And
Y'all been on a roller coaster, you about to give yourself whiplash.
we've been through every emotion. And in all seriousness, I think that us agents and lenders have been through all the emotions in the last 2 years. You know, we're like, oh, what's coming next?
It has been interesting. It has been a ride. It really has. I know one thing before we go, I wanted to talk about new construction because our team has recently, partnered with, because there are a lot of incentives going on with new construction. I know we talked about 100% program. So you could kind of tell us what you guys at Guild are offering for someone interested in building.
Yeah, absolutely. The beauty about building is that most people worry about the first thing is, I want to buy, but it's not going to be ready immediately. My interest rate is the concern. Well, we do have actually programs in place here at Guild. It's called the extended rate lock, and you can lock your interest rate for 6 months, 9 months, or up to a year if you think that it's going to take that long to go ahead and lock that interest rate. It's more like a protection on your rate. If the interest rates go up, you stay at the interest rate you locked. If they come back down, you can choose to float down, right? And then the beauty about going new construction is that you don't have to fight a bunch of offers. You can customize it to your own needs or likes within the builder requirements. And of course, right now, the builders are giving out really good incentives. There are some that have $10,000 towards closing costs. There are some that are paying 2 points on the purchase price of that house. So let's say the house is $350, a point is $3,500, 2 points will be $7,000 or $3,500. Yeah, let me pull out. Yeah. So $7,000. I wanted to make sure that was right. So, it can be used towards closing costs. It can be used towards points. So you can buy a rate a little bit cheaper. But there are incentives out there for you guys to commit with that new construction. So there are ways to actually get in. And I wish more people knew that because they will be taking advantage of that.
Because I think first-time home buyers probably get a little nerve thinking, okay, I shouldn't build, or I didn't think about building for my first home. But in today's, environment, it may be a viable option that you go ahead and get really what you want the first time around as an investment for your future. I mean, the resale opportunity for new construction is always there. So it is something for first-time buyers, I think, to think about as, their home solution as we still work with our inventory levels. I think new construction is a great option.
Yeah, especially if you are one of those people that like to analyze a lot of things, and you really need to ask questions. We'll be happy to answer those questions and break down the numbers for you. Because as I said, everything goes back down to the numbers and what you feel comfortable with. But yeah, for new construction has tremendous upside because, hey, you can just say, hey, my job is moving me away from here in 3 years. You'll have no problem selling that property just like that and having. And Amy and Janelle will tell you, hey, we can sell it quickly.
Yes.
Yeah.
Well, ladies, it's been wonderful. We probably ought to get this wrapped up. So thank y'all for coming on here. Thank you, Illiana, for joining us today. We got our phone numbers down there. If you need a realtor, you can contact me or Chanel. If you need a loan officer, reach out to Illiana, and we'd be glad to help you out, get you started,
Absolutely. Illiana, give them your Instagram handle so they can follow you and find your reels.
Let me look it up. But I think it's and I've seen other people changing theirs to lending. So what do you think? Should I change mine to lending? Mine is just Guild Mortgage, Illiana Byrd.
Gilmore. So you can find her now, but we're gonna find we might spice up her handle.
Yeah.
But you can find her Guild Mortgage, Illiana
Byrd.
Illiana Byrd.
There.
All right, there you go.
That's on Instagram. And then here on Facebook, they can just search your name and find you and follow you there as well, because you post a lot of, not just the reels, but your posts are all very informative as well.
Yes, we try to make sure that everybody's informed. And thank you, ladies, for inviting me. I've been enjoying this, and it's always good to say, hey, what's going on out there? So
Well, thank you for joining us. And again, guys, follow her reels for informative, very funny, but you want to be able to relate to your team, and we got you. So thank you for joining us. Thank you for being someone we can call on for our customers to shop and find out about your products. So we're definitely excited about what we can do together in the future. So we all have to do a reel together one day. We'll have to get together.
Oh, yeah. A regular video, like, you know.
No, we got to get you on TikTok.
All right,
look, we have to get you on TikTok, okay? So we got to get you on all the socials. So I'm sorry, I just let it out that you're not on TikTok yet, but your Instagram is the coolest ever.
Thank you. All right, ladies, you have a great Friday.
You
Bye.
too. See you guys later.
Bye.